This is our final meeting for the week, and this completes my daily review for the 2022 ICT free mentorship on YouTube series. All right, so we finally made a run below that May 12th, 2022 low here. And I want to take your attention into the hourly chart. All right, so here's the trading day for Friday, and we'll look at this when we get to it. All right, so we've consolidated. The market ran up, took the stop on my final balance on that paper trade. We moved up into a deeper fair value gap, creating the high of the day. We broke down below the 39.15 and a quarter level. Now, for me, this was a turning point that I required. Like, I didn't want to do anything prior to this run here. And today, I was utilizing that swing low there. So I wanted to see that break. So during the time on Twitter, I wasn't really interested in anything until that low was taken out. And you can hear that in the discussion. I'm wanting to see this low break. I was giving it an opportunity to see if it was going to show a willingness to come up here and run these highs. That could have very well happened, hit that, and then did all this business here. But it just so happens that it breaks the 39.15 and a quarter level here, and then right in there I'll explain how I personally would have been involved and how I actually was talking to my son about it, and these types of ideas helped him, propel his account today. The market trades below the short-term low here, took some sell side out there, and then ultimately taking out the 38.55 level rather handsomely. And we'll look at all this business when we drop down lower time frames. Let's look at the 15-minute time frame. All right, so here's that fair value gap it worked up into. I wasn't interested in all this business back and forth, chopping around. Finally, with the 39.15 and a quarter level, it broke through it, and then we had a gap in here, which we'll see on the lower time frames. That was, in my opinion, the better trade. So anyway, it runs through 38.72 and a quarter, creates another opportunity in here. You can actually see the fair value gap there. Trades up. That's another short. Worked lower, finally creating the short-term low. And at 1:30, that's when we start watching the afternoon PM session. It rallies up, creates a short-term high in here, fair value gap. The last hour of trading rallies back up into a fair value gap here. So if you look at the range from here to here, it goes back to a premium. I taught you that. So that's a target. This imbalance, fair value gap, reversal on Friday's trading up into an old imbalance there. Okay, so my son participated in shorts in here. He took 2 shorts and went long in here all throughout this, and was able to, again, push his account up $3,700 today. If we go into a 5-minute chart, here is that same idea where it went, created a low, 1:30, it starts doing its business. What's it reaching for? Going to go back into the middle of the range, into a premium. This is the array above. Half the move from here to here is 50% equilibrium, and this is the premium level. So it goes down, small little drop down in here into the fair value gap after 3 o'clock, and then the market starts sending it into an algorithmic spool where all this price action starts running aggressively into the close, up into a completely random level that was shown on the hourly chart. And here we have the market trading right up into that area, and then this consolidating going into the close. So now the idea of looking for a setup, let's go into this little area right in here. Here's that fair value gap there. It rallies up into it there and there, then breaks lower. In here, there's a fair value gap. It trades up into it there and sells off. Notice that it's occurring at the levels that I have here on the chart. Those old lows where sell side would be resting. So we're using the fair value gap after a run below. In other words, think of it like support broken, return back into the fair value gap, not listen folks, listen, not go back to the old low broken and act as resistance. Okay, that's not how I look at it. If the fair value gap doesn't exist, I don't trust that level as an old support broken term resistance. That's why I try to tell everybody that comes to me, oh, he's just trading break and retest, or he's trading support and resistance. I'm not, because I classify specific levels beforehand, looking at them with the logic that the market's going to create these patterns around them. Same thing here, old low, the fair value gap, it trades up into it. Why didn't it just stop at the 38.72 and a quarter level? Because it's going into the imbalance here, then delivers going lower. So the two shorts were in here and here. The longs were in here, here, and then riding up into the imbalance. Okay, and it's real hard to beat a live account proving it, and it's all the better when it's your own son pushing the buttons and seeing it happen. So that's just a really good feeling as a dad. So hopefully, with what I shared this week, I gave a lot of content, and today I just wanted you to understand what it was and why I was not willing to take a trade yet, because I wanted this level, the 39.15 and a quarter level, to be broken. I wanted that to happen first. And to do that, because on the 15-minute time frame, that gives me that break, whereas all up here, it's consolidated. I don't want to catch a break below a short-term low and then run relative equal highs. So let's go one more time back into the lower time frame. Well, actually, the first time going into the lower time frame. Scrub back here. Okay, so here is that return into the fair value gap here. So when it does this, I'm looking for it to move quickly away and start gravitating towards the other pool of liquidity down here. If you're looking at it from the relationship of short-term dealing range, this swing high, that swing low, we have our fair value gap here. It trades up into it there. And that level, 39.15 and a quarter. So it's a confluence of several things, but the level itself just highlights where the liquidity would be. The imbalance is what I'm keying off of and what I'm focusing on. So equilibrium or above is what? Premium. That's what this is here. Okay, that's on a 1 minute chart. So don't be discouraged or look at it from a perspective that, hey, the market didn't go to a premium. You just don't have the experience to see it yet. You have to do this for a while, folks. It isn't a watch one time and then you know it. Like it takes some effort on your part. But I promise you, if you work at it, you're going to get it. You're going to get it. And then once you have it, you can't forget it. It's like riding a bicycle. Okay. So hopefully this has been insightful to you. Hopefully you learned something this week. Hopefully I was able to propel your understanding a little bit beyond what you were thinking was about all you're going to get from me for 2022. I have obviously some more things I want to share with you, but hopefully, you enjoyed this week with me. And I'll touch base with you on next Tuesday, Lord willing. Until then, enjoy your weekend. Be safe.